Where to invest your money in 2025? With markets evolving and tech transforming the economy, this year brings exciting and smart opportunities. Let's break down the best investment strategies to grow your wealth in 2025. We'll cover the hottest sectors, the smartest moves, and how to navigate the ever-changing financial landscape. Stick around, your future self will thank you. Alright, before we dive into specific investments, let's get a grip on the big picture. 2025 is looking like a cautious, optimistic kind of year. We're seeing inflation stabilizing, which is a huge relief. Interest rates are expected to ease up a bit, which could be good news for borrowers and potentially boost certain markets. And of course, we can't forget the AI revolution. It's already reshaping industries and creating some seriously lucrative opportunities. But hold your horses, because it's not all sunshine and rainbows. Geopolitical tensions are still simmering and the market can be volatile, as always. What does this mean for you? Diversification is key, people. Don't put all your eggs in one basket and don't get swept up in the hype train without doing your due diligence. Let's talk stocks. Tech continues to dominate the market, but it's not just about throwing money at any tech company with a fancy website. In 2025, the real winners are going to be in AI infrastructure. Think the companies building the brains behind the AI boom. Cybersecurity is also huge because as our digital lives get more complex, protecting our data becomes even more critical. Green tech is another sector with massive potential as the world shifts towards sustainable solutions. And let's not forget about quantum computing. It's still early days, but this technology could revolutionize entire industries. When you're looking at tech companies, remember, hype doesn't pay the bills, earnings do. Look for companies with solid financials, real-world applications for their technology, and a clear path to profitability. And hey, while you're at it, don't limit yourself to just the US market. International markets, especially in Asia and Africa, are showing incredible growth potential. Real estate has always been a popular investment, and for good reason. It's tangible, it can generate passive income, and historically it tends to hold its value pretty well. But is it still a smart bet in 2025? The answer is, it depends. The pandemic really shook things up, with remote work becoming the norm for a lot of people. This means the old rules don't necessarily apply. Suburbs and secondary cities are seeing a surge in popularity, as people prioritize space and affordability over being in the middle of the action. And let's not forget about smart homes. Technology is transforming the way we live, and investors are taking notice. If you're thinking about real estate in 2025, it's all about understanding the new landscape. Look for opportunities in growing areas with strong demand, and consider how technology is impacting the market. Chapter 4. For years, bonds have been kind of the boring, reliable uncle of the investment world. You know, not super exciting, but always there for you. Well, guess what? Uncle Bond is back in style. After years of low yields, bonds are starting to look attractive again, especially with interest rates expected to rise. Government bonds, considered the safest option, are offering decent returns, and high-grade corporate bonds are also looking good for investors seeking a bit more yield. In 2025, bonds are a fantastic way to add some stability and balance to your portfolio. They're not going to make you an overnight millionaire, but they can provide a steady stream of income and help mitigate some of the volatility that comes with riskier assets like stocks. Remember, investing is a marathon, not a sprint, and having a well-diversified portfolio is key to long-term success. Chapter 5. Alright, let's talk about something that's close to my heart: ESG and impact investing. ESG stands for Environmental, Social, and Governance. And it's all about investing in companies that are making a positive impact on the world. This isn't just some feel-good trend, it's a fundamental shift in the way people are thinking about their investments. Consumers are demanding more transparency and accountability from the companies they support, and investors are following suit. In 2025, we're going to see even more opportunities to align your investments with your values. Clean energy is huge, as the world transitions away from fossil fuels. Ethical companies, those treating their workers fairly and operating sustainably, are attracting more and more investment. And sustainable agriculture, focused on reducing the environmental impact of food production, is another area with massive potential. The best part? You don't have to choose between doing good and doing well. ESG investing is about growing your wealth while also making a positive difference in the world. Crypto. The Wild West of the investment world. It's been a roller coaster ride for crypto investors over the past few years, with massive highs and gut-wrenching lows. So where does crypto stand in 2025? It's definitely maturing. Bitcoin and Ethereum are still the big players, but we're also seeing the rise of stablecoins, which are pegged to more stable assets like the US dollar and tokenized assets, which are basically digital representations of real-world assets. The regulatory landscape is also evolving, with governments around the world starting to provide more clarity and oversight. This is actually a good thing, as it brings more legitimacy to the space, but it also means tighter controls and potentially slower innovation. If you're thinking about investing in crypto in 2025, remember the golden rule. Only invest what you can afford to lose. It's a high-risk, high-reward game, and it's not for the faint of heart. Let's talk about the future of investing: AI-powered investing. Robo-advisors and AI-driven portfolio management platforms are becoming increasingly popular, and for good reason. These tools use sophisticated algorithms to analyze massive amounts of data, identify trends, and make investment recommendations, all without the emotional biases that can sometimes trip up US humans. They can also rebalance your portfolio automatically, optimize for tax efficiency, and provide you with personalized financial advice, all at a fraction of the cost of traditional financial advisors. But here's the thing: AI is a tool, not a magic bullet. It's important to understand how these tools work, what data they're using, and what their limitations are. You should always be in control of your investment decisions, and AI should be seen as a powerful ally, not a replacement for your own knowledge and judgment. If there's one thing you take away from this video, let it be this: diversification is key. Don't put all your eggs in one basket, no matter how promising that basket may seem. The best way to protect your investments and weather market storms is to have a well-diversified portfolio that aligns with your risk tolerance and financial goals. This means having a mix of different asset classes: growth stocks for potential high returns, real estate for stability and passive income, bonds for safety and diversification, and maybe even a little bit of crypto if you're feeling adventurous. Remember, investing is a long game. Don't get caught up in trying to time the market or chase the latest hot stock tip. Instead, focus on building a solid, diversified portfolio that will stand the test of time. Regularly review your investments, make adjustments as needed, and stay informed about the market and the economy. And most importantly, be patient. Wealth building takes time and discipline, but the rewards are well worth it.